Okay, let's look at problem 14.18 in your textbook, and it's a pretty comprehensive problem going through the budgeting process. So I want to work through this with you so you can see how the process works. So I've got a nice template set up here for us that we can go ahead and use. All we need to do then is pull the information from the problem. So if you haven't already, please go ahead and read through the problem, and then we're going to work through it. So I need to fill in the template. So it says up here under A, expected sales in units. So this is given to us in the blue box in the problem. So 13,000 in September, 12,000 in October, and I'm just entering those in, 14,000 in November, and December was 20,000 units. So that's our quarter, but I'm going to jump over here to January because we're going to need this for our future estimations, and February 10,000. Okay, so I can go ahead and total that up. I come to the home screen and I come up here and I click on auto sum, and I can just highlight October, November, and December. So during the month, our quarter ended December 31st, my total expected sales are 46,000. And you see those little arrows in there that'll tell you what you need to put in there. Selling price per unit. It tells in the problem, the first bullet point, company sells a single product at a price of $25 per unit. So I'm going to go ahead and just drag that across. So if you come to the bottom of the cell here, you can just grab it and drag it. And then I'm going to do a little multiplication. So go ahead and hit your equal sign. Click on the cell, which is D5 here, that 13,000. Then hit multiplies, which is the Shift 8 key, by 25, and hit enter, and then I'm going to drag this calculation across as well. Okay. And we can actually drag this down. The only thing I need to adjust is I'm not adding the sales price, it's what it is. So the sales price of every unit is $25. So if I take the 46,000 units expected in sales during the quarter times the $25, I get $1,150,000. Okay, so let's go ahead and jump down to part B here. So cash collections. This is referring to that second bullet point. So it says all sales are on account. The company's collection experience has been that during the month, 30% of the month's sales are collected in the month of sale, 68% are collected in the month following sale, and 2% are uncollected. So we can go into this little shaded area. So percent collected for September. So September would have already happened, and I want to know what percent of September sales I will collect in October. So it says 68% are collected in the following month. So I'm going to enter 68. Now for October sales, 30% of those are going to be collected during October, and 68% will be in November. For November, 30 will be collected in the month, and 68 in the subsequent month, which will be December, and then December 30. So you'll see here what we're going to do. So let's come over to October. We're going to go ahead and hit that equal sign again, the sales number times the amount collected, which is 221,000. And we'll do the same thing here for October. So October sales, during the month of sale, we sold 300,000. We expect 30% to be collected in October, and 68% of that 300,000 then to be collected during November. So I'm just multiplying those across. So November, 350,000 in sales, and then I hit the multiply key and I'll click on the 30%. And then we'll do that again in December here. So 350,000, I'm going to click on it after I hit my equal sign, and then multiply that times the 68% we expect to collect in December from November sales. And then the 500,000 times the 30% we expect to collect during that month of sale. That's 150,000. It looks like the columns are already set up to tab for us. So total cash collections are $1,008,000. Okay, let's keep going. We're going to need to scroll down here. Head to part C, which is our production budget. So we need to look at the units that are going to need to be produced. Well, the units that are going to need to be produced are going to be based off of our expected sales up here. So if we look at the third bullet point, it says the policy is to maintain ending finished goods inventory each month at a level equal to 30% of the next month's budgeted sales. Finished goods inventory at the end of September is expected to be 3,600 units. So I'm going to go ahead and hide these rows here so it makes it a little easier for you all to see it all on the screen. So beginning inventory, it said, was 3,600 units. So, and then in October, looks like I need to have 12,000 units I'm preparing for sale. Now my desired ending inventory, it tells us, is 30% of the next month's budgeted sales. So again, we can see here the next budgeted sales up here in November is 14,000. So we'll go ahead and click on that, multiply that times 30%, which I haven't yet entered here. Let's go ahead and plug that in. So it says $4,200 then would be the desired ending inventory at the end of October. And we can copy that. Oh, we can't. Let's go ahead and we'll just re-enter it. So December, take the 20,000 times the 30% desired. And the reason why I didn't copy that over, look at what we got to do here. We got to come up and grab January's number, multiply that times 30%, and that gives us $2,700. We go ahead and sum these three. And then, oh, in January, what would my desired ending inventory be here for January? Well, if we go up and we look at February's numbers, we need 30% of February's number. Okay, now we can fill this in. Beginning inventory is going to be my ending inventory for the prior month. So I can just go ahead and click that in there. I can actually copy that across this time, and we'll go ahead and sum that up. January, we'll have to pull that number from over here. Okay, so that completes our production budget. So what it says, if we have beginning inventory of 3,600 units, that means we need to produce 12,600 units for a total goods available for sale of 16,200, because we want 4,200 units on hand at the end of the month. That will allow us to have the 12,000 units available for sale that are expected. Okay, let's go ahead and scroll down again. We can work on part D here. So now we need the materials purchases budget. So if we know what's going to be produced during each of those months, we now need to figure out how much we need to purchase so we can produce those. So in the problem, it tells us that we require 5 pounds of material for each product. This is part number 4. So I'm just going to multiply then the units to be produced times the pounds required for each unit. So we'll take 12,006 times the 5 pounds per unit. This time we can go ahead and drag that across. Oh, didn't work for me. Let me back up. Oh, we can't drag that across because I didn't make that a permanent cell reference. What you can do is come up here and we'll put a $sign in front of the D and in front of the 32. That's locking in my row and column. Now I can go ahead and drag that across for these two. Then calculate a sum. 225,500 units is what we're looking at, need to be used in production for October, November, December. And then we'll go ahead and do the same thing here for January. Multiply that times the 5 pounds. Now it'll tell us 46,500. All right, we got to go down a little bit further now. So that's what we need. But let's see what we already have. In the problem, it says we began with 25,200 pounds on hand. So if we need 63,000 pounds for the production, that means we need to purchase 37,800 pounds during October. Desired ending inventory, it says, should be 40% of the next month's estimated usage. So I'm just going to go ahead and go next month's usage we said was 79,000. Multiply that times the 40%. $36,600. And again, I can do the same thing I did before. If I come up here and I click on that, I can also hit the F4 button. It's not working on my Mac. So I'll just put a $ in front of the D, a $ in front of the 40. And then I can copy this, grab that corner again, copy it across. And that'll tell me for November I need 33,400 in my ending inventory, 90,200 desired for December, and then these would be the total pounds used in production, and this would be what I would need to purchase for each month. Let's go ahead and total those up. We'll complete the table. Make sure we get the right information. And just like we did up above, our beginning inventory was our previous month's ending inventory. So we'll plug that in. May make a couple minor adjustments here. And then we'll total that up. Looks good, looks good. I do have one small correction here. I copied over this formula, so it was grabbing the total number, and I needed to grab the January number. So let's edit that. Let's go ahead and click on the January total pounds, multiply that times the 40%, and then we have a slight correction here. Looks good. Okay, the very last thing we need to do is calculate the payments then for those purchases. So we'll come down. And purchases of raw materials. So what is the cost per pound of the raw materials? The very last bullet point for the problem says $2 cost per pound. So let's go ahead and multiply the purchases of raw materials, which we just calculated, by the cost per pound of the material. And this time I will be able to copy this formula across by putting the $ to lock it. We're going to lock it into that cell is what we're doing when we put those $ in. So when I drag it across, it doesn't adjust. And then we'll auto sum those. For $437,800 total cost of our raw materials purchases. And then the very last thing we need to do is look at the cash payments by month, because we don't pay for everything when we order it. So it says 70% of all purchases are paid for in the month of purchase, the remainder in the following month. So October would be 70, and then in the subsequent month we would pay 30. November 70, then 30, then 70. Now let's come back up to September here. That would be 30. Purchases during September, it says the accounts payable is expected to be 37,980. So go ahead and plug that in. And then we'll do the multiplication here. We'll take the October purchases, which comes from our what we calculated above, times the 70%. Then we'll do for November the same thing. This time times the 30%. And finally for December, we'll take the December, what we had left to pay for from our November purchases, and then our December purchases. We'll pay 70% of those in the same month. So what we end up with is a total cash payments in October, $135,140, $154,760 for November, $144,660 for December, total $434,560. So hopefully you can see how all this flows, and the information down at the bottom for cash purchases for our raw materials is dependent on Again, setting that sales and production budget early on so everything flows accordingly. Thank you.